Welcome back, Jeep Divers. Today we're going to take a deep dive into Blackstone Inc.
Blackstone Inc.
Blackstone Inc., the alternative investing giant.
Yeah.
We're going to see if it lives up to Warren Buffett's value investing principles and see by the end if it's a golden goose or a risky gamble.
Yeah, what's really interesting to me about Blackstone is that they've built this empire on alternative assets.
Go.
So that's a whole different ballgame than just, your typical stocks and bonds.
Yeah, for those maybe not super familiar with that world, what falls under that umbrella of alternative assets?
So instead of just buying, shares of a company, Blackstone actually goes out and acquires entire companies.
Wow.
And not just any companies. They're laser focused on businesses with huge growth potential across all these different sectors like tech and healthcare and consumer goods. But they're not just into, buying companies. They're also a major player in real estate.
Oh, wow. So we're not just talking like, of apartment buildings.
No. We're talking skyscrapers.
Oh, wow.
Hotel chains. Massive logistics hubs. I mean, they own properties that shape city skylines and fuel global commerce. It's incredible how diverse their real estate portfolio is.
So how do they turn all this stuff, these companies, these properties into money? What's their magic trick?
So they've got a brilliant two-pronged approach. The first thing is management fees.
Okay.
And that's like steady recurring income based on the total value of assets they manage. And just last year, those fees topped $7 billion.
Wow, that's a big subscription.
It is, but that's just the first part. The real moneymaker is the performance fees.
Okay.
So if the assets they manage generate a profit, whether that's a company's stock going up or property value increasing, Blackstone gets a cut of those gains.
Okay. So they make money just by managing the assets, and then if the assets do well, they make even more money.
Exactly. It's built-in incentive to make sure their investments thrive.
That does sound like a pretty sweet deal, but wouldn't that also mean that they're kind of exposed if the market takes a downturn?
Absolutely. You're right. The performance fees can be lucrative, but they can also fluctuate quite a bit.
Yeah.
Remember when their net income jumped a crazy 11,117% in Q4 of 2024?
Yeah.
A lot of that was due to their acquisition of Retail Opportunity Investments Corp, or ROIC.
ROIC.
Yeah, exactly, which is a real estate investment trust that focuses on shopping centers. So that deal really boosted their real estate portfolio, but it also shows how much those performance fees depend on the success of their individual investments.
So it's not always a smooth ride, even with a company as successful as Blackstone.
Right.
Makes you think about the long-term strategy.
Yeah.
Speaking of long-term strategy, let's talk about their CEO, Stephen Schwarzman. I mean, he seems like a legend in the finance world.
He's been leading the company since it started back in 1985.
Wow.
And, they've made it through some tough times, like the 2008 financial crisis, and they actually made some really smart investments when everyone else was panicking. He's known for taking calculated risks and having a long-term vision.
That takes guts.
It does.
But it also makes me wonder how much of Blackstone's success is tied to his leadership. What happens if he decides to step down?
That's a great question, and it's a potential risk for sure. I mean, Blackstone does have a really strong management team, but there's no denying Schwartzman's impact, So it'll be really interesting to see how they handle succession planning in the future.
Okay, so we've got this legendary CEO guiding this massive, diverse portfolio. But how financially healthy is Blackstone? Are they sitting on a ton of cash, or are they about to fall off a debt cliff?
Well, their financials tell a pretty positive story. Their revenue growth last year was an impressive 64.9%, and their profit margins are strong. I mean, an operating margin of almost 50%.
Wow.
Yeah, and their debt-to-equity ratio, which measures how much they rely on borrowed money, is a reasonable 0.69.
Those are good numbers.
They are.
Yeah.
But remember we talked about their earnings being all over the place, especially with the performance fees.
Right.
And one thing to keep in mind is that while their recent growth has been amazing, if you look at their average annual net income growth over a longer period of time, it's actually been declining by about 0.9% per year.
So the long-term picture might not be as bright as the headlines are making it seem.
Exactly. Past performance doesn't guarantee future success. And even a giant like Blackstone is subject to, the whims of the market and the economy.
Yeah, you got to look beyond the headlines.
Absolutely.
Okay, so it seems like even with these giants, you got to look past the big splashy headlines.
Definitely.
So we've gotten a good handle on Blackstone's business model,
Right.
their leadership, and a little peek into their financials. But what are people saying out there? Are analysts cheering them on, or are they like waving red flags?
Well, it seems like the overall feeling from analysts is cautiously optimistic. They've got a moderate buy rating
Okay.
with an average price target of $190.20. So that suggests there's still potential for about a 25% upside.
Okay, so there's room to grow, but it's not like a screaming buy now signal.
Right.
What's the hesitation?
Well, it's interesting because there are some mixed signals out there. There's this thing called the market rank score,
Okay.
which basically takes into account a bunch of different factors like earnings and valuation and even short interest. And it's giving Blackstone a hold rating.
Hold on, back up to sec. Short interest, for those of us who aren't, Wall Street wizards. What is short interest?
So imagine someone thinks that a stock is going to go down in price.
Okay.
They can actually borrow shares of that stock, sell it at the current price, and then hope to buy it back later at a lower price to return it to the lender, and they pocket the difference.
Okay.
So that's short selling.
Okay.
And short interest basically measures how many shares are being shorted.
Gotcha.
So Blackstone actually has a pretty low short interest ratio, meaning not a lot of investors are betting against them.
Huh. Okay. Interesting.
Yeah, which could be a good sign.
So some analysts are, potential. Others are maybe a little more cautious.
Right.
And short sellers aren't exactly, banging down the doors.
It's exactly.
What about Blackstone's, recent moves? Anything making headlines?
Well, their recent announcement of an $8 billion real estate debt fund definitely got people talking.
$8 billion.
Wow.
Yeah. It's a big move, and some see it as a really smart way to take advantage of the credit market right now, while others are a little bit worried about the risk that comes with real estate debt, especially with how volatile the market has been.
So they're making a big bet on real estate.
They are. It's a bold move, but I guess that's kind of what we've come to expect from Blackstone.
It makes you wonder who's backing them on this gamble. Who are the big players, putting their money behind Blackstone?
Well, they've got a pretty diverse group of institutional investors. The biggest one is Vanguard Group. They own over 8%.
Wow.
Yeah. So when a huge player like that invests, it usually means they have a lot of confidence in the company.
That makes sense.
But it's also worth noting that there's been a mix of buying and selling among institutional investors recently. So it seems like there might be some uncertainty about what the future holds for Blackstone. So some people are doubling down, others are maybe cashing out.
Yeah, it's a bit of a high-stakes poker game.
What about the folks running the show, the insiders? Do they have skin in the game?
It's interesting because insider ownership is actually pretty low, less than 1%.
Really?
Yeah, and like the institutional investors, there's been some buying and selling by insiders lately, so it's hard to say what they really think.
So it's all a little bit mysterious.
A little bit.
Okay, so you've got a lot of big institutions, you've got, a few insiders, and then everyday folks like us maybe holding a few shares, but who really calls the shots at Blackstone?
So this is where things get a little interesting. From a governance perspective, there's a pretty high concentration of ownership among the directors and officers,
Okay.
meaning a relatively small group of people have a lot of power over the company.
Huh. That's interesting.
Mm-hmm.
So what does that mean? What are the implications of that?
Well, it definitely raises some questions about, checks and balances.
Mhm.
It's important for shareholders to feel like the people making decisions are doing what's best for everyone, not just themselves.
Yeah, transparency and accountability.
Exactly.
All right, so we've looked at what the market thinks. We've talked about who owns the company and, even potential governance concerns. But let's get to the nitty-gritty. What are the biggest risks that Blackstone is facing? What could really trip them up?
Well, that's where the classic SWOT analysis comes in. Strengths,
know.
weaknesses, opportunities, and threats.
Love a good SWOT analysis.
So Blackstone has a lot going for it, but they're not invincible. Like any company, they've got their weaknesses.
So what are their biggest strengths? What gives them a leg up?
Well, their brand reputation is a big one. They're seen as leaders in alternative investing, which attracts both investors and companies that want to work with the best. And their global reach is huge. They have access to opportunities and deals that most firms can only dream of.
That makes sense.
Yeah.
But even Superman has his kryptonite. What weaknesses could hold Blackstone back?
Well, the nature of their business, alternative assets, it makes them really vulnerable to market fluctuations. So when the economy takes a hit, their investments can suffer, and some of their investments can be pretty complex, which might make some investors a little hesitant.
So volatility and complexity are two things to watch out for. What about opportunities? Where can Blackstone go from here?
Well, the demand for alternative investments is only growing.
Right.
And Blackstone is really well positioned to take advantage of that. They could expand into new markets and new parts of the world, which would make their portfolio even more diverse and open up new avenues for growth.
So expanding their empire even further.
Pretty much.
Ambitious. But what about threats? What could derail their success?
Well, regulations are a big one. The financial industry is heavily regulated, and any changes could have a big impact on Blackstone's costs and how they do business. And they're not the only ones in the game. There's always the threat of more competition from other big players who want a piece of that asset management pie.
So they're always going to have to be on their toes.
Right. It's a competitive world out there.
It is. Okay, so we've got strengths, weaknesses, opportunities, and threats. But how does all this tie back to the big question, is Blackstone a good investment?
That's the million-dollar question, and at the end of the day, each investor has to make that decision for themselves. Blackstone does have some ways of managing risk with their diverse portfolio and experienced leadership, but no investment is completely risk-free.
Yeah, you have to weigh the potential rewards against the risks and see if it fits with your own investing style.
Exactly. We've given you the information now. It's up to you to do your research and make an informed decision.
I like that. Yeah. All right, so before you go making any decisions, we've got some great resources for you and an exciting announcement, so stick around.
All right, so we wanted to tell you about a great resource we partnered with for this deep dive.
Yeah, the team over at Stock Analytics AI.
Stock Analytics AI. They've got a really cool YouTube channel that's all about making you a smarter investor, especially when it comes to value investing.
Yeah, they use AI and all this data to really break down companies and give you these insights that you won't find anywhere else.
It's like having your own personal research team.
I know, it's great.
They're always putting up new videos with deep dives on different companies, and they even give some stock suggestions to get your portfolio going.
Yeah, so definitely check them out.
We'll put a link to their channel in the description below.
For sure, and if you want even more info on Blackstone, let us know in the comments.
Yeah, drop your questions down there and we'll do our best to answer them.
Yeah, and just a quick reminder that everything we've talked about today is just for informational purposes. It's not financial advice.
Investing always has risks, so do your own research, talk to a financial advisor, and make sure your decisions match your financial goals and how much risk you're comfortable with.
So there you have it, folks. We've taken a deep dive into Blackstone Inc. We've looked at their business model, their leadership, their financials, what the market thinks, and even the risks and rewards.
Yeah, we've given you all the info.
So now it's up to you. Is Blackstone a value investor's dream, or is it a gamble you don't want to take?
Whatever you decide, I think it's so cool to explore and evaluate different investments. Keep learning, stay curious, and happy investing.
And until next time, happy deep diving.